All right, so I haven't done a video in kind of a while, but I did want to go over today's trade just to kind of help some individuals that are interested in learning how to trade and or just to help some individuals potentially utilize my trading strategy. So today, if I was to move this all the way over here, this is what you would see at 8:45 in the morning. Okay, so I normally get to my charts at around 8:30. So if this is all you're seeing in the charts, right? Let's break this down a little bit. We have a 4-hour chart over here, and at 8:45, you're going to be right around on the 4-hour chart, right around this area. Okay, right? So if we're seeing this movement, we can see that it took out the previous daily low, and then it had a displacement move right here, okay, creating a change in the state of delivery on the 4-hour, okay. And if you look here in the 15-minute, there's also a fair value gap that price returns into on this candle here and moves up to take out New York PM session high during Asia session. So just with that in place, it gives you somewhat of an idea of where price may go. If you're looking at the 4-hour, you can see that there's a 4-hour order block up here. So this morning I was thinking potentially price could work its way up to that 4-hour order block. We also have a 15-minute high right here, which is buy side liquidity. And if we're here at 8:30, it really kind of seems like price is working its way up to take this liquidity here and potentially work its way up into this 4-hour order block and maybe even this 4-hour high, where this high took out the previous daily high over here on this 4-hour chart. You can see it took out that liquidity, but it kind of left it a little bit too smooth. It just barely got up there to take the liquidity. So my anticipation is these are kind of relatively equal highs still that have some orders where price may move and work its way to. And even up here, these relatively equal highs here and all the way back here, which is a previously weekly high. And the daily fair value gap that has not been filled in. So I'll go in this and I will go to the daily so you can see. So you can see this area here was the traditional daily fair value gap, but price has worked its way through here a little bit. So I normally just shade the area that has not been worked into yet because there are orders up there where the market may want to go and grab these orders and potentially even come up here for this weekly high. Okay, so with that context in mind, we have a bullish sentiment, bullish idea for Monday and potentially this week up into Wednesday, where Wednesday could create the high of week and then we see a sell-off. So with that in mind, when I'm looking at this here, I can see that we've got some relatively equal lows down here, right? So there's some sell side down there. Let's go ahead and mark that out with this. We have Asia low here, which is also sell side liquidity. And we have this we have some 15-minute fair value gaps. If we were to go in a 1-hour, we can see that there's a larger 1-hour fair value gap right here, right? Where price could draw to. And better yet, on the 4-hour, which is a higher time frame, so we have a 4-hour fair value gap right in line with all that liquidity. Okay? So with that in mind, I'm thinking that the markets are generating this liquidity for later in the week because they need to go up and grab these orders up here first. So if I'm at the markets here by 8:30, this is what I see. And when I see this, I can see that We haven't swept any of these lows, but this low, we've taken this liquidity here. There's this big wick. You've also taken this liquidity here, right? Because that's a swing low. We have a higher low, a lower low, and a higher low. So it's a swing point. Liquidity is swept down here. And during London, we can see a displacement move, creating a change in the state of delivery. It returns back into a very small fair value gap right here. Moves up, creates another one right here. If I can get the mouse to work. Now it comes down just a little bit just to retest this one, as you can see on this candle. So this is kind of what I'm looking at, and I'm thinking we potentially can come up and grab the 4-hour order block, which I showed you, and we're working our way up towards this buy side. Okay, so then as I see this here, I can see this liquidity has been taken in the change of state of delivery, and price is respecting the bullish fair value gaps. I can also see right here, this is a swing point, and liquidity is also taken. We have a displacement move right here, creating a change in the state of delivery. Whoops. Okay, so if I can't see any of this quite yet, and I'm looking at it like this, I can see liquidity's taken, and then a displacement move up, changing the state of delivery, showing me that price is continuing higher. So I'm going to go ahead and mark out, we've got a fair value gap right in here, but also right in here. So I'm going to mark out both of these. And keep that change in the state of delivery shown. We can start getting rid of some of this other markup so that we keep the chart clean. So as we come up here, I'm expecting the price to come back down here. And if you take the Fibonacci from this swing point to this swing point, that fits right in line with the 0.62, 0.75, and 0.5 range, which very commonly when you have a move like this where it's a low and a high and it starts to sell down, it's going to come down to that 6.2 level and have a reaction off it, potentially move up. So with all that information, I then place a limit order here in expectation that price is going to come and take this swing high. And as you can see, that's where my limit order was. I added another position here. As I saw, you can see here I've added one at the 50% of that fair value gap. And as I saw the reaction as I was pushing up, I added another contract because that gave me the confluence that my idea may be right. My stop loss was just below this low here for 25 ticks, meaning if it would have dumped, I only would have taken a 25 tick loss, which is a very small stop loss. On 2 contracts, I was risking 140 bucks. And then it pushed all the way up, took out one order right at the buy side, and then it kind of struggled. So what I ended up doing is I ended up just closing the position because I had hit my daily goal of anywhere between 300 to 500 a day per account. I'd hit that daily goal, and then the market jumped all the way up and went to the 4-hour order block that I had expected price potentially to go to. Now I could have left one of these contracts on, but I would have moved my stop to break even, and then on this candle here, it would have stopped me out, because you can see it hit that, and then a lot of people probably sold, so it grabbed orders, pushed it down here a little bit to grab some more orders in this fair value gap where orders are resting to push it up exactly where that 4-hour order block is. So instead I just decided to take my profits where it was at. I was using 2 micro contracts. So if I was using 2 mini contracts, that would be over $2,000 per account. I have 3 accounts, so that would be $6,000 in less than 30 minutes. I don't care that it goes up to that 4-hour order block up here. I don't feel like I missed that move, because that's just my long-term terminus of where I think price will go, and eventually up here at some point in the week, probably by Wednesday, tomorrow or Wednesday. So my expectation is it's hit my low-hanging fruit, and I'm comfortable and I'm happy with that. I'll take that profit and I'll move on to the next day, mainly because right now we're in high resistance liquidity markets. From January to March, it's typically fairly high risk. There's also kind of a lot going on in politics that are causing these markets to respond how they are responding. So if you were to break this down into a 1 minute, and we come back over here, you could even enter and capture on a 1 minute. So you can see here I entered at 9:25 before market open, which market opens at 9:30, which usually causes a lot of volatility. I don't recommend doing that if you are a new trader. I would recommend taking a position after 9:30. But even then, it does still come down here. So you still would have been in this position if you were going off the 15 minute. But if you're going off the 1 minute, the exact same thing happens. Look at this swing low here. There's the liquidity that's swept. This is now a model inside of a model. So that 15-minute sweep and the change of state of delivery, a return back to a 15-minute fair value gap. You see the response. It sweeps this liquidity here, has a change in the state of delivery here, creates a 1 minute fair value gap right here. That is where you could take your entry. Your stop would be below the lows. Take profit at that high. That's that 15-minute buy-side liquidity for a 2R. That is plenty right there. That is great risk to reward ratio. If you're risking 2 micro contracts, you'd be making about $200, just over $200, $204 to be exact. If you took both micro contracts off, if you were risking 2 mini contracts, you would have made over $2,000. If you took 1 contract off here and then let one go for a runner all the way up to that 4-hour order block, you could see here you'd have almost a 5R trade, 4.5. That's a very good setup, very good risk to reward ratio. And that's what you really want to be looking for when you're trading. You don't expect to be right 100% of the time. If I was to show you, my statistics, actually, what we can do, let's go ahead and pull this up. I will actually, since we are now later in the day, I can actually pull my order from today and add it into my journal, which I recommend that you always have a journal. Okay, successfully added it. Let's go back here. So you can see in this account I'm down $126.50, which is okay. my win ratio is 50%. 50%. You can still be profitable at 50% because I'm going to continue with this proper risk to reward ratio, as you can see, as I've shown here. And over time, the account will compound. And since it's a small account, it's going to take a little bit of time, which I'm okay with. My goal is I funded this account with $2,500. By the end of the year, I want to see if I can get it to $100,000. And then continue to compound it from there. So that was the way that I traded today. That was the setup that I took. You can see the executions here. So I'm going to go ahead and clean up this chart because I don't like to have all this nonsense on the chart. I'm going to keep this liquidity down here because those are major liquidity points. You can see where the market is kind of rolling over, right? We had swept this liquidity here. So what I would like to see is a fairly decent amount of displacement here, creating a fair value gap for them price to return back up to and dump down for the sell side liquidity. Okay, so that is what my expectation is. I'm still thinking that we are bullish because what could happen is we've swept this liquidity. We are inside of this fair value gap. We could continue to move up, take out these highs, take out the previous daily high, so on and so forth, and work our way up to this high up here. Okay, so that is what I'm looking for. I'm not going to trade tomorrow. Fed Chair Powell speaks tomorrow. Probably won't trade that. I'm absolutely not going to trade when he speaks at 10 a.m. I have this news from 2 Degrees. Shows me here, Tuesday at 10 a.m., Fed Chair Powell speaks. Wednesday at 8:30, we've got CPI. So I would trade after 8:30. Again, Thursday, 8:30, you got PPI. You're going to be trading after that. And Friday, 8:30, core retail sales, we'll be trading after 8:30. Okay, so I'm not trading tomorrow, but I could expect Wednesday, Thursday, Friday to be pretty good. My expectation going into this week would be Wednesday. By Wednesday, we are up and we've taken all this liquidity up here. We are up here. Thursday, we could go slightly a little bit higher and start to roll over, and Friday dump down and grab all this liquidity down here. Okay, that's what I'm expecting. Unless the market just dumps now and takes it and then works its way up, which it could very well do. So it just depends. This is how I read markets. I don't have any indicators to tell me. I just read price action. If you want to learn how to do this, you can follow my YouTube channel. I do go over my entire strategy. Sometimes I trade live. Eventually, I will be trading live full time at some point in the future. So hopefully that helps you if you are a new trader, even if you're not a new trader and you're looking for a different way of looking at the markets. Hopefully that gives you a little bit of insight on how I trade. Until next time, talk to you then.